Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we begin to look at this week in Forex, we start off with a couple of things, and that is the market is now looking for the next crisis. We finally have shrugged off most of the residual effects of the Greek debt crisis. The bailout has been approved, the investors have been approved, so the market is starting to stabilize from that. And so now what's starting to take the forefront is the strength of the Chinese market. Recently we had the Chinese growth rate downgraded from 7.5% from 8%, and what's important about that is China has been known to always outperform its growth rate, and so that's concerning. And it's concerning on a couple of ways. First, we have the lack of demand. Remember, China imports a lot of commodities, a lot of steel, a lot of cement, and of course a lot of oil, which is keeping our gas price higher. And so if their growth rate is going down, that means they're going to be importing less. And secondly, of course, China buys a lot of currencies. And so if they're not going to have the money to buy the currencies, what is that going to do to the forex market? So, of course, the market is trying to prepare for what is going to be next. So right now, what's driving the dollar? You'll see in a moment where we're going to talk about the dollar kind of going sideways. It's in this 79 to 82 range, and now it's closer to 79. This week, we're going to have several of the Fed speakers scheduled to speak, and we're also going to have the fourth quarter GDP revision, so we'll see if the dollar can hold on to 79 and bounce. Of course, the strength of the dollar has been that there's not going to be, at this current time, any more quantitative easing, but we haven't seen that flight to gold, which we'll talk about when we put the charts also. But again, what's going to drive the dollar this week? As far as Europe, we have some of the bond action has started to level off a little bit here. And if you ask me, it has a little bit to do with what's going on with the reaction to the budget. The budget that was presented last week was, got some negative attention. Austerity's here to stay. And so that garners some negative attention. And also this week, we're going to be watching Germany's IFO, which basically is their business sentiment survey. We are starting off by looking at the dollar chart. This is one of our market sentiment leaders. And we can see that we ran up and touched that 81 price level, and now we're falling back, and we'll see what happens as we hit 79. But we can see that the market is sort of ranging just a little bit here over for the 2012. As strong as the market has been, the dollar has been weak, seeing that inverse relationship. And as we said, last week we saw the dollar rise and the stock market rise, and now we're seeing the pullback. So we see our point of control right here at 80. We'll see if we can get back above that, but the dollar is a little weak. Moving on to gold. Well, usually weak dollar equals good for gold, but here we have a marriage where even gold is taking a little bit, and what was once support at 1660 is now acting in as resistance. So we'll see what happens, but gold also is weak. 1660 as a resistance, 1670, and then we have our 250 moving average right above it. And finally, crude oil. It's now creating a new range. It used to be 102 to 96, used to be the range, and now we're watching 102 to 110. We are taking a look at the euro dollar daily chart, and the one thing you'll see really for the 2012 is this range that the market has been in around 1.303 all the way up here to this big push up, and now we've come back and we've paused just a little bit here. So the market really has been ranging for the most part, and now we're coming right back up here to 1.3268. And you can see here on the hourly time frame, I'm watching that price level to see if we can get above it. But we're right back in the middle of the range, and which we failed the last time we got up here, and we're starting to fail again. But we'll have to see what happens. So right now, I'll definitely say in the short term, the euro dollar is sideways. But of course, we know as we zoom out, we can see the downtrend on the weekly, and we also see a downtrend on the monthly. Zooming over to the 1 hour time frame, you really see that sideways price action that we're talking about. Yes, we are in a neutral zone. You can even see our Bollinger Bands are going sideways. That's how long we've been consolidating. We're in a range 1.314, 1.328, and our indicators are also starting to show that sideways price action. Now, we talked about the budget that was presented for the pound, and we can see that the pound has lost some of its steam, even though it was stronger than the euro dollar, and it is above its 200 moving average. It's also in this range where it's just consolidating. You can see support. Buyers are finding strength here at 1.56 right here on the daily. But again, in our short term, we would say sideways. Coming out to our weekly, we would you could potentially say downturn on a weekly, on our monthly. Overall, I would almost contend to say that it's sideways across the board. On a 1 hour time frame, we're just fractionally in a sell zone, but again, we can see the sideways action. We're above a long-term moving average, and we can see the Bollinger Band starting to go sideways like the euro dollar. Finishing off with the dollar franc. On a daily chart, we're seeing whether or not this 0.9083 will hold up as support. We had that up a little bit higher before, but we have all these wicks down here that I did move it down. Our moving averages, here's the 15 and 20 going sideways, starting to. We are ever so slightly in a buy zone on a 1 hour time frame. But again, starting to see a little sideways action here in the dollar franc also. Again, what's going to drive the dollar? What's going to drive any of these pound currencies now that we're through the Greek crisis? Will the potential, I don't want to say weakness of China, but the lack of demand from China affect our currency market? As we come to our watch list, we first start off with our low volatility watch list, which is our 1 hour time frames using Bollinger Bands. We're looking for that consolidation, we're looking for that squeeze so that we see the market as pausing, and we're watching for the breakout, preferably in the direction of the trend. Right now for our low volatility watch list, we're going to be watching the pound yen. For our inside bar watch, we're looking at the daily charts, and we're trying to find the range of a day being within the range of the previous day, the high and the low, a candle within a candle. And for that, we're going to be watching the Aussie dollar and the euro yen. Moving on to our education spotlight, we're kind of finishing off our long discussion about trading plans. We always talk about trading plans, but we really went through all the different components and how to construct it. And so we're ending with basically what's the purpose. And the purpose is to come up with realistic trading goals and objectives. Why are you trading? What are you going to trade? And how are you going to trade it? And again, the importance of I putting the term realistic in there is having rules-based trading and not emotional trading. There's got to be a purpose for why you're trading. There's got to be a purpose and a reason for you to get into a trade. And we have to get off of that willy-nilly feeling. There's a place for intuition in trading, but that intuition has to be supported by rules. As always, comment, like, and subscribe so that you can stay up to date with our latest videos and the happenings here at Move It with Mike. You know about what we offer with our emphasis on our managed forex accounts. Put our expertise to work. leading forex brokers, full transparency. We'll devise a trading plan for you. Send us an email. Go there to the link, michaelglass.com /forex-XML, and we will send you some of the statements that showing what we've done for our clients. Guys, in the end, it's all about your ability to make informed decisions about your financial future. And that is through rules, that is through a trading plan, and that is not by emotional trading. Thanks, guys, and I'll see you next time.